Hi guys, you're watching The Wealth Project and welcome to our presentation on SNPR. We're here today, we're going to go through the background of the company, the key performance indicators, and what we think of their latest investor presentation. So as we know, SNPR build electric chargers with screens on them, and they build them in very convenient locations. The reason they're different, if you like, is because they've got them and they put them in these locations like gyms, shops, places you visit more regularly. And they also have the ability to use targeted advertising on the screens. So then they generate revenue from both advertising and charging. So whereas you'd have your traditional petrol station you might go to fill up, obviously, your gas guzzler and kill the planet. Obviously, Morgan's got like a 3 litre piece of scrap, which he uses, fills up on the daily. But this will just be, if you go to the gym, you'll plug in your car whilst you're there, and then you'll just drive off at the end. So it's a much newer concept to the way we do things. It's a much newer concept to the way petrol stations have been in the past. So what have you guys thought so far of SNPR, searching through it?
Great intro, Sam, minus my vehicle, but so SNPR, they're looking to hopefully merge at August, and obviously before we go into this presentation, they give you 15 minutes of free charging before they give you a competitive rate. There's lots of competitors in this, but I think with SNPR, the advertisement thing and the proof of concept they've done, which again we'll go through, looks really good for them.
Yeah, me personally, I'm more skeptical. I think as soon as VW, Ford, BP, obviously everyone's installing these stations now. As soon as they realise, oh, actually, we can put a big old LCD screen on the front and we'll do some advertisements as well. That for me, SNPR is then redundant. So for me, this is purely a SPAC play. I don't have faith in this going long term at all. But I think the hype is there currently on electric cars and electric charging points where we can see our followers make a bit of money off this.
I think they've got, I'm not sure what's patterned on it, but I do think this is definitely a short-term sort of play into them merging with Volta Charging. Like you just said afterwards, if this does work and, their income and their revenue is increasing, it's only going to be a matter of time before the huge companies see this and essentially either copy or just change it a little bit. That works for them.
Yeah, that's it. It'd be hard to get a pattern on. Essentially, they've just stuck
very limited to what you can pattern on that.
Yeah, that's it. So if we have a quick look through the investor profile, if George, you want to take us through?
Yeah, sure. So as you can see, this is the first page that we kind of were looking at just to get an idea of what they're trying to get at with their presentation, what kind of theme they're trying to set. And you can see here that they're already talking about electric cars kind of dominating the market over some time. Obviously, right now, they're significantly more expensive or nearly on parity with regular petrol cars, sort of demonstrating that EVs are going to become cheaper over time and more people are going to be buying them. So I think that's fairly straightforward, right?
Yeah, it's one of those where it's all very future and very hypothetical. Obviously, at the moment, sales of electric cars are only 2.6% of the US market, obviously, which they're targeting. So really, sort of the EV infrastructure doesn't need to be there, obviously, as much as it probably will be in the future, because that is certainly the way everything's going, especially under the new administration at the moment.
Yeah, I think with this 36 months on this, I think 3 years to 4 years is definitely sort of the right amount of time with this, because we have seen with the batteries, they're finding it hard to source certain key elements to make that, and obviously with Tesla increasing the prices, I think 3 to 4 years, I think electric cars definitely will be cheaper, and obviously it kind of has to be with the environment, and obviously with the increase of electric vehicles. Demand's only going to increase, and they need somewhere to charge.
Yeah, a lot of the Scandinavian countries, actually, they have a lot of electric cars, and I do think a lot of electric vehicle sort of companies and infrastructures and things, they mainly obviously set up in America because of how big their target audience then can be in future. But the only company really demonstrating it at the moment is the Scandinavian countries, because there's such high taxes on petrol and diesel cars that it makes sense now. In some of the countries, I think Denmark, you can get electric cars can make up 40% of sales. So that's how much it's changed over there, and I do think it will change over here.
Obviously, I think Morgan and I mentioned this before, but there's obvious comparisons between Netflix, Amazon, Airbnb, and so on. But we see this a lot with a lot of SPAC companies doing mergers, is where they try to identify their Airbnb of the market or the Netflix of the market. But who knows?
Volta's going to be the electric of the market.
Yeah,
could be.
You look at those and you think, well, if it's going to be the next Netflix or Amazon, brilliant. But can't beat Netflix and chill.
Yeah, so I think this also touches on the concept of no longer going somewhere to fill up your car or to charge your car, let's say. So we abandon that idea of there being a location where you need to fuel your car up. You just go to wherever you need to go. And I think there were instances, I read, there was a page in here, which we'll probably come across, but it mentioned that people were actively finding these stations because they enjoyed using them more or for the free charging. So they're aiming to lure people into certain establishments or near certain establishments.
Yeah. The only issue I actually see with this is that the infrastructure is not quite there for electric chargers at the moment, because they can only charge, I think it's up to like 120 watts or something like that. And basically, you look at the brand new Porsche Taycans, fully electric. They made a big thing out of the fact that it's the fastest charging EV out there. But there's no infrastructure to have a charger that powerful. Obviously, they've got to get that power from somewhere. So whether it's they have to dig up some roads and things, in which case it might be better to still have them all in one location again. That's the only thing that I could see.
So their main thing at the moment is the level 2 chargers, the standard level 2 ones, and that is between about 3 to 7 kilowatt, and that takes, give or take, from flat to full charge about 8 hours on a 7 kilowatt charger. Again, very dependent on location, but the thing with Volta now, they've got the DC fast charging stations. So you can literally go to a shop, and these are 15 times faster. So these are between 50 kilowatt and 100 kilowatt, again, depending on location. So you could go to a shop, and whatever someone's average shopping time is, say 45 minutes, and near enough have a full battery life on your car. And I think that definitely that will be the biggest thing. But obviously, it's the amount of power that goes into that battery without damaging it. But the DC fast charging points now, they're starting to put out.
Yeah, especially like you look at places like the gym. Obviously, if you go for more than 10 minutes, like me, but if you go 10 minutes like Morgan, then
you go drive in the morning.
But for most people, if you're doing that, or say you're parking it for work or things like that, then you just there's never that point where you have to stop on the way home from work, pick up some fuel.
Yeah, I definitely think that was the biggest problem initially with electric charging, is obviously with the fuel, it takes like 3 to 5 minutes to fuel up and pay or whatever, whereas someone's like, I'm not waiting 8 hours to charge my vehicle. And that's now they've brought out these new chargers.
Yeah,
there's a huge incentive, and obviously you save a lot of money as well.
Yeah. Well, on the new Porsches, I remember they brought them out. Obviously, it was this big thing. They're the fastest charging car. I think you could charge it in something ridiculous, or get 80% in like an hour or something like that. But there's only 2 locations across the UK when you can actually do that. So what's the point? You might as well just get a normal battery.
Or a hybrid.
But
sort of main sales at the moment.
I think you see a lot of this though. There's a lot of cases, especially in computers, for example, or in phones. That's maybe a better example. But you'll see a phone that'll come out with like 18 cameras and 180 hertz screen and all these crazy specs, right? And it's like they're there to get the headline. They're not there to be practical. So I think that's what that was all about.
What else we got on here, Joe?
I think this is an example of Volta at Whole Foods in LA. So this is like an ideal site for them. And I think
that's where the hipsters go with their electric cars, buy their organic produce.
This is like pretty much the perfect market for these types of, like, you could just imagine that middle class family.
Tesla.
But that's where they've said they want to target their charging stations. It's not just in whatever fuel station along the road or whatever's convenient on the motorway. It's where it's a visual aspect, and advertisement is sort of the main point of that. And a lot of it is like Whole Foods. I know they have Target, Macy's. This is obviously all American at the moment.
You go where the nice cars are, don't you?
Yeah.
At the moment.
And obviously coming out of COVID, consumer spending set to soar as well. So advertisement is going to be a key aspect to that, and what influences a customer before they go into a shop.
I'd be interested to know what they mean when they talk about OEM launch campaigns, because I think that refers to working with car manufacturers to actually bring out these, maybe branded in some way or sponsored. That could play into what Sam was talking about earlier with car manufacturers just being like, oh, let's make a bunch of stations. Maybe it would be in their best interest to just partner with a company that is dedicated to them and put their logo on it.
Well, if you go to, I don't go out very much anymore due to COVID. Nice little recluse in the corner. Sometimes see a bit of daylight, but if I do go to like the Tesco's nearby, they've just put in a Volkswagen charging point at the Tesco's, and often in the big Sainsbury's and big basically supermarkets, they'll have a selection of electric chargers already there. In which case, I wonder how much, because really the only difference then would be advertising. Obviously, if you can put it at gyms and things, great. But if the gym's big enough to have a charging station, they might just put one in anyway.
Yeah, I feel like this is a lot of this charging station business, or especially this method of doing it in particular, seems to apply a lot to the US market. Because if you look at the US, like a city like LA or something like that, those cities are primarily just residential and then car parks. It's just parking lot after parking lot after parking lot. And they have actual like mandates, or they have laws where if you build, let's say, a residential apartment building or a supermarket or anything, there's like a minimum amount of parking space you have to have available. And you could theoretically fill the country with these things and still, like, they wouldn't be able to keep up with demand if they wanted them everywhere. There's so many parking lots in the US, but you can't say the same really in other countries. Like, I don't think that's the case in the UK.
Then the next stage after America is to target the Europe audience. They did say that in the presentation, and with the SPAC proceeds, that a lot of the money is going to be making it expand quicker and installing more electric stations. So I think it will be focused on America for the next maybe year to 2 years, but I think they'll definitely be looking at the European market.
I think America's a lot more raw than a lot of places, probably Europe.
Yeah.
Obviously, with there's so many government things to get emissions down, and you've got every new house now that you build has to have an EV charging point in it. But America, obviously, especially under Trump, in that you never had to do any of that.
No. With the Biden, obviously with Biden being the president now, and obviously with inflation and with him influencing the EV sector with funding and so on, they did say in their presentation they don't actually need it. They're not relying on it at all. They said it obviously would help because any money would help, but it's not actually necessary, which I think that's a real positive, that it's not reliant on these infrastructure sort of deals.
Yeah, I think there are also some issues with having a bunch of charging points everywhere. I mean, I work for an energy company, and I obviously can't say too much about it, but I know that there are plenty of concerns when it comes to, if a lot of people get electric cars and everyone decides, oh, I want to just have a charging point, or I want to charge my car at my house. There are grid concerns where a lot of these power grids are not actually equipped to handle that kind of load all at once. So
that's, I think,
this is going to involve like years of actual infrastructure before.
Huge.
Yeah, and it's not necessarily going to involve just this company. I think the government also has to put in.
Are you saying that we should short your power company that you work for?
Lucky for you, they're not public.
Shame.
Like, it's not some kind of risk to the power grid or anything like that, but it is a concern that I think a lot of grid operators around the world have to deal with. And it's that
I think they're going to have to, because it's definitely going to be, charging stations will definitely have to be there. You have your home charging and so on, like you were just saying, but it's a thing that's going to happen with the increase of electric cars.
Yeah, but I'm saying, like, in order to do this kind of work, it is incredibly invasive.
Yeah.
So you got to like dig up whole cities to make this stuff work properly. And that kind of infrastructure project, it goes beyond installing some chargers in places. I think their concern also lies with infrastructure, which is out of their control. But anyway, we see here on the investor presentation, this is their timeline. Conveniently, it starts at 2012 and ends at 2022.
Yeah, that's a pointless slide going.
We got a Volta EU launch. That's what Morgan was just talking about. Plug and charge, pay per use. I'm not sure what in-car partnership refers to. Maybe getting certain manufacturers to.
The thing is, with these presentations is it's all well and good in saying that, but until it's actually proven and they've done it, a lot of
that one's purely to get the word count up, I would have thought.
Got to reach 50 slides.
Yeah, that's it. Got to stick in a few photos.
So we got current unit economics, I guess, is just their economy of scale model.
Funny enough, I know on that point, on their partnerships, so I think in Fords, for example, you can charge up your Ford at reduced rates. So that might be
okay.
That.
Well,
so these are
the national scale of their screen stations and sites.
It's definitely increasing.
Yeah, we got 3,000 installed. That's a decent number. What do we got? 2,000 more contracted, so 20,000 in the pipeline. That is quite a lot of charges. But I don't know how much it was. I think Biden or somebody in the US government mentioned some magic number of amount of charges that the US needs, and I'm pretty sure it was more than 20,000.
Well, I can tell you, I did have a look, did my little bit of research, and VW have pledged to build 10,000 in America, and 1,800 in the UK.
Do they give a time frame on that?
2025. So
yeah, I'd say this pipeline probably is around the same time frame.
Yeah, so that's a major shift, and obviously they're a much bigger player than SNPR are, which is why I'm sort of playing this purely from a SPAC.
That's why I think SNPR is so it's sort of intriguing in terms of trading this, because obviously we're pretty much sat on rock bottom here with common shares worth, whereas
we're at 990, right?
To charge point or whatever, you do have that downfall play. Whereas as we've seen, running up to the merger, like we always say, we always see a nice run up. So I think the price and just obviously being a SPAC is why SNPR we've picked over all the other charging stations.
Yeah,
and I'm sure there will be more that do better than SNPR. But I think in the current market and this year, I think SNPR in terms of charging, I think they're probably the best plays.
Yeah, there's not many purely EV charging companies really, because so many of the main manufacturers are now getting into it. So it's like we've had before with the electric cars, where previously, like you had your Teslas, you had your ACTC and things like that, people that are getting into it.
Yeah.
But as soon as sort of we're having a look at sort of the government contracts that people might get, and if General Motors gets it, then it doesn't make a massive difference to their share price.
Was it with Workhorse that didn't get the contract, and this was a few months back or something, and the price just dropped?
Yeah.
But this isn't really relying on any of that kind of side, I suppose. But
no, it's a similar concept where it's good until like the big names get in. Obviously, you can see from their team, they've got people from Tesla there. They've got people from big companies, and obviously they've seen the shift that's had previously.
I mean, it's good to see like they're actually linked with a similar sort of industry, if not the same industry. Obviously, one from ChargePoint, Uber, Tesla. These are the people we're trying to look for that are actually in an industry that's exactly the same or very, very similar.
Yeah, it sort of tends to be the same for a lot of these SPACs. They've always got high-powered boards. This one's a lot more diverse than a lot of them. A lot of them you probably see a few more car manufacturers and things like that. Obviously, you always get your financiers, so your Goldman Sachs, I mean, you don't often see Yahoo, to be fair, but obviously that's a similar sort of industry. You've got ChargePoint and Tesla, which you'd expect, but a few of these are a bit more grey. Don't get me wrong, they're probably very qualified individuals, but they haven't been. You usually see the big brand names in there.
In comparison to the other ones, yeah. I think with the TDAC one we did last week, obviously there was huge names in that, with DraftKings and so on.
Yeah.
This one's a little bit more diverse, but I think they each play a really key role in this, and I think that's why I think their team links really well with what they've got.
I wanted to, because I was looking at this slide before,
Yeah,
and I found it interesting. They have like their own proprietary tool to plan their network, and it uses AI. Do you guys read up on that?
I didn't personally, no.
Yeah, so they have machine learning algorithms that kind of let them predict where it would be.
It sounds like Jordan all over. It's definitely your field, Jordan.
Yeah, I found this kind of cool because I mean, this is kind of what I've been working on. Well, not this specifically, but I've worked in ML, and yeah, it's kind of interesting that they can kind of pick locations where they'd get the most revenue. I can't imagine that there wouldn't be other companies doing this, but and it could be possible that they've just thrown in machine learning into the presentation and just gone, we do ML, we do blockchain. I don't know, but
watch out, they'll be buying Bitcoin next.
Yeah, paying Bitcoin for your charging.
Maybe they can follow Apple's lead.
Yeah,
rumored. Sorry, rumored.
Yeah, that'll be interesting to see. But
obviously, with the actual charging station, if you compare it to if you just leave that page there, I'm not sure that's the best picture for it, but it looks pretty good.
Yeah, I'll bring up the other one here.
It looks really, really professional, very slick, nicely looking. Whereas if you compare it to a lot of these charging stations, they do what they're supposed to do, but they just look like a fuel station. Whereas this, catches your eyes, and I think they've probably done that on purpose as well, because obviously with the advertisement, and I mean, I think that's definitely an additive to you compare it to like ChargePoint or something.
Yeah, these chargers remind me. I don't know if you guys have them in the UK, but they remind me of the advertisements that you have on the bus stops. On like the side of every bus stop, there's those huge rolling things. Yeah. They remind me a lot of those, but with like a cable sticking out of them.
I'm sure SNPR would be delighted to hear that.
Yeah, I don't think
all
so.
their designers and they go, "Oh yeah, looks like a bus stop."
It really does. In a way, like if you put two of them, like they almost have they have two of them.
I know exactly what you mean.
I just thought of a bus stop.
Yeah.
But maybe that's just me and my Australian brain. I don't know.
Shall I have a look at the financials?
Yeah. Let's have a look.
As you can see, for a lot of the SPACs, you always get ridiculous revenue figures. So you can see on here they obviously just 25 million, 47 million, and then somehow they're going to jump to 141 million, then 280, then 492, then 826. I can almost guarantee they will never ever reach that, because none of them ever do. But they purely want investment, so they're going to throw out ridiculous figures. Whether they're able to over triple their revenue between 2021 and 2022 will be interesting.
I just think the amount of money going in, because obviously they're paying for these charge stations, so that's going to cost them. But they've said, depending on which charge station this is, it takes, give or take, 2 to 3 years for it to be paid off for itself.
Yeah. I guess they don't have to pay them after that. It's just purely revenue
to make their money back, essentially.
Yeah, that's it. But the thing is, you think they've spent quite a while just building up a network, which is a relatively small network at the moment. But then they suddenly think within 2 years they'd be able, like from where they are now, they want to somehow be doing 6 times that in production and installing across multiple countries.
Yeah, it'd be interesting if they reach Europe in time before everything, like you just said, catches on with advertisement. You know, the whole digital marketing scene at the moment in the whole world is just increasing.
Yeah. So you can see on here, they've got their EBITDA figure. So for those which don't know, that's earnings before interest, tax, depreciation, and amortization. So at the moment, they're negative 30 million. They claim to basically break even next year or 2022, and then start going positive. It's the kind of data we'd hope to see their operating expenses basically creep up at a lot lesser rate than their revenue, which obviously shows good control of their costs.
I think they're doing really well, and I think they just want to be they may well be, they may not, but be a major name, and I think they're going the right way about it. Whether they will or not, that's just highly dependent on how, I think, quickly they can do it.
Yeah.
But obviously to do it right.
It is like you said though. Once they've got them installed, then
it's the contracts. If they can get the contracts down very quickly,
And I think they mentioned long-term contracts. I heard saw something in the presentation that said 10-year contracts.
Yeah.
Maybe I'll have to do a Control F on that one, find it. But
that's the kind of thing you want, though. You don't want something that lasts a year, because in a year or two, if someone's copying it, and again, these big names can offer it cheaper, that they're going to go for it.
Yeah.
It'd just be nice to keep going with these contracts and get some more sort of high-end names with this.
Yeah. That's what we hope. Hopefully, if they can partner with some of the big names, because I must admit, a lot of big names won't want to, or they might be slightly further behind than they think. So
but
they might
something to do with the Amazon contract they've got, and I think that's going to be one of the biggest ones they've got currently, and that might extend as well.
But I imagine that's purely advertising, is it? Or
I'm going to have a look at it a bit more. I only briefly saw it just before we did this, but I think that's going to be one of the major sort of bits, as well as any more contracts they get up, and hopefully we see some big names.
Fine.
I think this is what I was referring to before, where they have multiple revenue streams and counterparties that are secured with 10-year plus contracts.
Okay. That's good, because obviously as soon as they got them installed and they've done the initial first few years, then they probably make their money back, and that's obviously when they start really making money, because it goes back to, it's like if you buy a shipping container, for example, and you're just renting it out £100 a month, you eventually obviously make that, and it gets to the point where you're just making money off it. Then they're not the kind of things, obviously they need a little bit of maintenance, but once you've got it there, that's the main cost. So obviously we've got SNPR's graphed here. So this is the past month. So you can see obviously there's sharp rise at the very start, small rise. Obviously the crashes which have been happening, they've been going down. As a SPAC play, this is kind of like excuse the handwriting because that's right on paint. So, but this is the general sort of SPAC format that a graph will take. So we'd expect obviously the initial rise here, followed by sort of a second push, but because of COVID and things, it's been a bit tough.
That first rise is the announcement.
Yeah, that's it. That's when they first basically come on, and there's loads of hype about it, and then dips off. Then it usually gets a little bit of a second buzz, which I think we've seen. And now I predict basically they're about here. Don't get me wrong, nothing's ever certain. I'll take this. But yeah, so this is where we now think we are. Because the push it's had, it'll probably slowly go down a bit more. But hopefully this is where we hope to be by August, and this is why we think it's a good play. That every SPAC near the date pretty much will just rise and rise. So provided the environment's pretty good, I mean, on a rare occasion, SPACs at the moment aren't really happening. And that is one reason why this down here might continue to drop off.
Yeah, we definitely saw last year SPACs definitely had a momentum play, but this year's slightly different.
Yeah, that's it. So
it's not as easy as it used to be.
Not in current market conditions, definitely not.
I wouldn't be surprised to see it go a bit like that, and then it hopefully come up near the SPAC play, but it would just be later on. But I wouldn't be surprised to see it sort of test the waters sort of around here, and see it sort of fluctuating a bit, like we've seen with a lot of stocks, to be honest. But obviously, this is the point we want to get to, and this is our sell point. Anything past here it's
a risky game.
Yeah,
it may go up, but like you've literally done in the chart, most SPACs usually correct itself from the hype, and then they start running up a bit more, like you've done on the. I mean, there's so many examples of SPACs. I mean, you got Hyliion and so on. After the merger, and I think, from when I traded last, you can't. I think I had a 2-day period where I couldn't trade it anyway, so I was watching it, and it was just moving around, and I can't do anything about it. And that's obviously the ticker change, and depending on how quickly they do that.
Yeah, that's it. And the thing is, you really don't want to get caught sort of buying around here and then selling like here. Like a lot of people just get caught up in the hype. Obviously, if you buy it early, I think it's about 9 or something ridiculous now. Or I can't remember what it is.
$10. But $10 usually is the common share on this, so there's minimal downside risk.
Yeah. So really, you just want to hopefully get in early, get the SPAC play. You might have to be patient because of COVID. Afterwards, for us, we probably wouldn't recommend it because it's just too uncertain. Obviously, this isn't financial advice, so do whatever you want.
Occasional purpose.
I wouldn't be putting my house on it, but some people don't value their houses, so you can put whatever on it. But
it's a risky growth play.
Yeah, certainly we'll be playing with a lot of caution, hoping to get in fairly early. So we've got a little bit in this, but they've got proof of concept. They've got the contracts. They've got big names in with them. It's more of a case of how the environment will go and how sort of the big companies will react. If they form a partnership, they'll skyrocket. But if they decide to bring out their own version, then a lot more difficult. Yeah, that's it. I think that just about sums us up, doesn't it?
I think that sums up how I feel about it as well.
Yeah. So we'll hopefully all be getting electric cars soon with our trading profits.
You can use one of the 2 special charging stations in the whole country.
Perfect. If I get that 120 grand Porsche, that'll be fine. Probably end up with a Nissan Leaf finance.
17% interest.
Yeah, that'd be it. Oh yeah, if you just buy it for 25,000 and then you just have interest of 40% and you eventually pay back 50,000. Oh yeah, great deal. But
I'll take it.
Yeah, £200 a month. Oh, brilliant. Cheers, guys. That's the case.
Thank you very much for watching, guys, and we'll see you next time.
See you next time.
See ya.